in the past couple of years, net exports has been the growth engine for the Chinese economy. And I think that is part of the reasons why you're seeing huge capacity build up in the last couple of years in EVs and also in solar panels as well. So I think going forward, because of the impact from the tariff, I think net exports as a percentage of global exports will decrease because the production center has been reshoring, or some of them has been reallocated to the neighboring countries. So I think net exports in 2025 would stop to be the most important growth driver for the Chinese economy. But then at the same time, I think the property market still needs time to heal. Even though we're seeing some tentative signs that some of the tier 1 cities are having a transaction and price volume bounce back, but it's very difficult to see a national recovery in the property market. So I think it still takes time. So next year, because of the two of the most important growth engine for the Chinese economy is still sort of faltering, and therefore the economy will be struggling as well.
And in terms of the policy response, does it mean that the Chinese authorities are going to have to try to engineer a weaker currency?
I think more likely than not, Chinese currency would be one of the weapons, to defense against the tariff. Already we're seeing, the substantial depreciation pressure on the Chinese yuan. Now we're at about, 7.3. One shouldn't be too surprised to see depreciation depreciated beyond 7.5 and above. So I would say that, in the 2018 trade war episode, the Chinese currency, depreciated substantially. It actually acted as a buffer of the tariff pressure. So I would say, this time shouldn't be any different. And already we're seeing depreciation pressure on the Chinese yuan already.